Yeah, guys. See the continuation. What is the objective of the auditor? According to SCA 200, overall objectives of the independent auditor and the conduct of the audit in accordance with the standards on auditing. According to SCA 200, it is only two concepts: to obtain the reasonable assurance about whether the financial statements are representing true and fair view. And the second one is to report on the financial statements and communicate as required by SCS. Only two objectives. Main thing is reasonable assurance. What is the reasonable assurance? And absolute assurance. Absolute assurance means these books of accounts are totally free from all material misstatement. Means no fraud, no irregularity, no error, nothing. These books are totally free from all types of the fraud and errors. Totally. That is called as absolute assurance. Reasonable assurance means he can give not 100% but close to 100%. It won't give 100% guarantee that these books are free from all types of the material misstatement. Why? I am not doing 100% audit, because at a random I select the few transactions. The selected transactions only I am doing the audit. Then how can I say that the entire books of accounts are representing the true and fair view? That's why absolute assurance is just impossible, because I am not doing 100% audit. Whereas since it is the test checking means at a random I select the few transactions. The selected transactions from origin to conclusion I will verify. If they are representing true and fair, I would say that entire populations are representing the true and fair. In auditing, population means transaction. Remember, in the auditing, whenever I use the word populations, means I am referring about transactions only. That's the only meaning. And fine. And see the point here, analysis of these points here. The auditor's objective is to obtain reasonable assurance whether the financial statements are whole, free from material misstatement. We know what is the material misstatement. It is about ACDP. Means the books are free from all types of the fraud and error. It is free from all types of the fraud and error. Material. The word material means, remember, substantially affecting. That's the meaning. Means a huge amount is involved. That is only material. 5 rupees, 10 rupees or 100 rupees, negligible amounts are there. Even fraud is there, error is there, no issue, because it won't affect the ratios of the organization when you calculate. The users of the financial statements won't have any effect with that. That's why material it should be. Then that's why material misstatement, not a minute one. 5 rupees, 10 rupees, 100 rupees, 1000 rupees. It makes no difference in the financial performance of entity. But how much material is based on the organization size, it reflects. Right? Reasonable assurance is distinguished from the absolute assurance. Absolute assurance is the complete assurance or a guarantee. See the word. They are giving a guarantee that financial statements are free from material misstatement. That's why auditor can never give 100% guarantee. That's why reasonable assurance means we can consider. However, reasonable assurance is not complete guarantee. Then what it is? It is the high level of assurance but not complete assurance. High level means, I said, close to 100 but not 100. It may be 90% or 95% or 98% or 99.9% but not 100%. That means auditor cannot say that once audit is completed, these books are totally free from the material misstatement. If I said that word means absolute. Otherwise, I have to give reasonable assurance. Reasonable means it is not 100% complete guarantee. Right? Remember, number of times you will come across. Since we are going to be tomorrow's TA, definitely this word will haunt you always. And the audit of the financial statements carried out by auditor with professional competency and skill in accordance with the standards on auditing. What is the professional competency? Member of the ICAI. You become the member of ICAI. At a foundation level, what are the subjects we have to learn? At intermediate level, what are you have to learn? At articleship, how it should go on? What is that you are training there? And computer training program, orientation program. So final subjects, what is that you are going to learn there? And finally, and how you are going to be, what skill you need, the competency is going to be inclinated by ICAI from time to time. They say at a foundation level, basic knowledge. At intermediate level, they say that it is going to be expert knowledge. Nothing but you should be able to judge the things and according to your requirement, they have to say that basic knowledge you have to understand. Otherwise, the working knowledge. Otherwise, the expert knowledge. What is expected from you? Each level they say competency. Professional competency means what are the subject tomorrow's CA should learn ICAI from time to time, revising the syllabus and updating their syllabus. You are not an outdated person. You are going to be updated from time to time. And the other one is skill in accordance. Skill means orientation programs are conducting. Once CA passed, later what all the changes are taking place in the law, auditing or SCA's standards and auditing. What CA people are doing, they are conducting workshops. They are giving the orientation programs are there, so that you can always ready to enhance your skill and with the help of the standards and auditing. The audit procedures are applied in accordance with SA. Audit evidence is obtained and evaluated, and on the basis of that conclusions were drawn, opinion is formed. Based on audit evidence only, you are going to draw the conclusion finally. And it is the high level of assurance is called, see this word, high level of assurance is called reasonable assurance. Reasonable assurance means it is close to 100 but not 100. Absolute means 100% assurance. These books are totally free from the material misstatement. That is absolute assurance. Reasonable assurance means it is close to, I am not giving 100% guarantee because I am not doing the 100% watching. Test checking at a random. I am going to select the few transactions. The selected transactions only I have done the audit. They are called a representative sample. See, from origin to conclusion, verified. If they are representing true and fair, I would say that entire population is representing. That's why. And misstatement in the financial statements occurs on account of the fraud or error, or sometimes both. What's the meaning of a fraud? Fraud is intentional and errors are unintentional. Know that. Fraud is done intentionally, means knowingly, willfully, deliberately, people are colluded and they do the fraud. Means an organized fraud, this is called. Errors are unintentional, means by mistake it happens. Errors can be detected easily, but a fraud cannot be detected easily unless you investigate that item. And the auditors seek to obtain reasonable assurance whether the financial statements are whole free from material misstatement caused by fraud or error. He has to see the effect of the material misstatement on the financial statements as a whole in totality, right? Whether rice is properly cooked or not, I need not see the whole rice. By touching the 1-2 pieces, we would say that finish. Similarly, by testing or watching the few transactions, I would say whether this organization is there any irregularity or not, because at a random I'm selecting thereby. And the obtaining the reasonable assurance that financial statements as a whole free from the material misstatements enable the auditor to express his opinion whether the financial statements are prepared in all the material aspects. But all items are recorded in the books of accounts in accordance with applicable financial reporting framework. What is applicable financial reporting framework? I told you in the previous class, financial reporting framework, which means format. He is talking about a format only. Financial reporting framework. Wherever you see that word financial reporting framework, format only. Ours is the company. According to Schedule 3 of the Companies Act, we have to follow the format. Balance sheet, part 1. P&L account, part 2. Similarly, in case of a banking regulation act formats are the schedule you have to follow. Insurance company schedules are there thereby. Okay, no? That is financial reporting framework. In the opinion is reported and communicated in accordance with the findings of through written report required by the standards on auditing. SA 700 and later part we are going to learn. And remember that the definition of auditing. It is a systematic and independent examination of the data, statements, records, information, financial or otherwise of an entity. For any auditing situation, auditor has to pursue and recognize prepositions before him, collect the evidence, evaluate the same, form the opinion which is communicated through audit report. So based on that evidences only, you have to draw the conclusion and communicate. Okay, these overall objectives, just to whatever may be there here, these points you turn at home. Okay, right. Now, what is the scope of audit? In case of a scope, what is the meaning of a scope? Range and reach of something. Range and reach of something. Remember, already we know this point. Why audit is necessary? As a public company, as a private company, we deal with different stakeholders. Who are the stakeholders? Like investor, shareholder, supplier, creditor, banker, government, society, employee, government. So everyone who deals with the company versus outside. They deal with the company, they wanted to know, I want to make investment in this company. I want to withdraw the investment from this company. Otherwise, I want to see that I will supply material on credit to this company. I wanted to know organization rules and regulations. Thereby, this is going to be what is the scope. And listen guys, the purpose of audit is to enhance the degree of the confidence of the intended users. Means the financial statements are going to be used by certain interested people. See to that the people, those who are using this data, are getting the correct information, adequate information, accurate information, so that they can take one decision. In the financial statements, the users of the financial statements may be the shareholder, employee, customer, government, regulatory authority. Who is regulatory authority here? SEBI, Securities Exchange Board of India, and bankers, etc., enhancing the degree of the confidence to achieve by expression of the opinion by the auditor on whether the financial statements are prepared, all the material aspects in accordance with applicable financial reporting framework, which means in this organization, the financial reporting framework is properly followed and grouping of items were ascertained according to requirement. So he has to going to certify, auditor is going to certify that the financial statements, what are the financial statements? Profit and loss account, balance sheet, cash flow statements, and accounts to notes. All these things were prepared and all the material respects and accordance with applicable reporting framework. Nothing but the formats were followed as and when required. And other one is here, Applicable reporting financial framework is nothing but a preparation and presentation of the financial statements in acceptable with a view to nature of entity. Nature of entity, banking company formats are different. Insurance company format is different. Company format is different. Partnership, horizontal form of a balance sheet. According to their requirement, you need to prepare the formats. And the objective of the financial statements are required by law and regulation. For example, this is given Companies Act Schedule 13. For company point of view, the financial reporting framework is provided Schedule 3 of the Companies Act 2013 in case of companies in India. The following points are included. What is the scope of audit of the financial statements? Coverage of all aspects of entity. Audit of the financial statement should be organized adequately to cover all aspects of entity relevant to the financial statements being audited, which means you are not doing the bits and pieces of the accounts. You are doing the audit as a whole, but not a part. And the reliability and sufficiency of the financial information. Auditor should be reasonably satisfied. See the word. Reasonably not absolute again, reasonably satisfied that information contained in the underlying accounting records and other sources of data, nothing but bills, vouchers, documents, is reliable and sufficient based on preparation of the financial statements. How the financial statements are prepared? Voucher posting, voucher posting, voucher posting. Month-wise vouchers are ready. If you want any time, audit trail, one concept is there. Later part it will come. Any voucher you can verify, and whenever you want a date, if you take the date and you can verify that date, voucher number, folio number, everything is there. You can go back and verify whether this is properly posted or not. Auditor's point of view. And auditor makes a judgment of reliability and the sufficiency of the financial information by making the study and assessment of accounting system and the internal controls, carrying out appropriate test inquiries and procedures. What is internal control? Just I am giving the meaning here. Internal control system. Later part also same words will continue, and remember repeatedly this word will come. Internal control system. What is internal control? The rules and regulations to be followed in order to accomplish objectives of the entity, or the policies and procedures to be followed in order to accomplish objectives of the entity. The meaning of internal control system. The rules and regulations to be followed in order to accomplish organizational objective, or policies and procedures to be followed in order to accomplish organizational objective. In simple, I would say internal control system is nothing but AOA, Articles of Association, in case of a company. In case of a partnership deed. Nothing but how to run the show, we need to have certain set of the rules and regulations. Nothing but a internal control system. Policies and procedures to be followed to accomplish organizational objective. Your policies relating to what? Accounting and financing, management and administration, and operations, and lastly compliance. This is about compliance. So your internal control system consisting about these 4 parameters they have to write in very clearly. What are those points? The rules and regulations related to accounting and finance. Do's and don'ts in accounts department. Finance department, do's and don'ts. Fine. You need a capital, own capital or borrowed capital. If it is a borrowed capital, what are the rules and regulations? secured loan or unsecured loan, how much loan they can borrow, with permission, without permission, define. Otherwise, they don't know what exactly to be done. At the same time, share capital. What type of the shares you can issue? The public equity share, preference share, with equal voting rights, or DVR, differential voting rights, or preference shares, so types of the share. Parameters we have to define, so that directors will take a decision how to mobilize the funds. Keeping of financial statements, accounting and finance point of view, do's and don'ts. Other one is management and administration side. This is administration at a top level, management at a different levels of organization, top level, middle level, lower level, supervisory level, each and every department you have to give the rules, including cleanliness and maintenance also should be defined, unless you give it for the outsourcing. If you want to give it for outsourcing, your internal control system should permit. Write the do's and don'ts. And other one is operations. What are operations? Based on the organization, which type of organization it is. It is profit oriented. Then what are activities usually will be there? Production manager, production department, marketing department, again finance department, HR department, like this various departments will be. Department wise do's and don'ts defined, because production functions are different, marketing activities are different, and HR activities were different. What exactly they have to do, define. Based on that only organizational objectives we are going to accomplish. And finally, compliance. What are the compliance? If mine is a company, under the Companies Act 2013, some conditions I have to satisfy. What are the conditions to be satisfied? Define. If yours is a bank, as per the Banking Regulation Act, compliances are there. If yours is insurance, as per Insurance Act, compliances are there. If yours is a electricity company, as per the Electricity Act, some regulations you have to satisfy. So based on your size of the company, nature of organization, what are the compliances we have to satisfy? These are 4 parameters clearly defined. Once the directors are appointed, managerial persons are appointed, they should know their do's and don'ts. Internal control system designing, developing, implementing is the primary responsibility of management. Auditor is not responsible. Auditor is not at all responsible. It is a management duty to define internal control system. Best example, and within the family, we have the certain rules and regulations to be followed. Similarly, organization also. Within the organization, you are appointed as a marketing head. You should know what are your authority, what is your role. Then already defined. Just take the manual and accordingly follow. You need not ask anyone. You need any clarification, talk to higher authority. It's like a route map. So one organization's success or failure largely depends upon the internal control system. Persons may come and go, but organization should go for indefinite period of time, means define the internal controls effectively. Persons are not permanent, but organization is permanent. They may come and go. That's why define such a stringent rules in organization. There is the little scope for the any type of error or a fraud. That's why internal control system plays very, very important role. Prevention, detection of the any fraud and error is through internal control system only. Prevention and detection of the any fraud or error will be there only through ICS. When you appoint an auditor, auditor will come and ask only one question. Do you have internal control system? Yes. Then he will select at a random few transactions of internal control system. He will process it to know whether this internal control system is giving expected result or not. If it is giving expected result, he can rely on the information generated by management. First thing is, that's the internal control system. What is the purpose of internal control system? Speedy detection of the any error or a fraud. And the later part it will come back, sir, again internal control system, then you have a internal audit, then you have a internal check. Internal audit. Once internal control system is there, internal audit under section 138 of the Companies Act, we need to appoint internal auditor. What internal auditor will do? Examine, review all internal controls, where we are effective, where we are weak. He will recommend the management. These are internal controls. We are very strong, away free from all types of irregularity. There are certain internal control system. Still some defects are there. We have to correct it. Then he give recommendations also. How to plug the weaknesses. Internal auditor, one of the function is to certify that internal controls are effective or not. As an external auditor, when I come for audit, my first question would be, do you have the internal control system? Yes. Do you have internal auditor? Yes. Who is our internal auditor? Qualified or unqualified? Qualified auditor. Excellent. How many times internal audit was conducted? Every quarter internal audit conducted. How many recommendations given by the internal auditor? How many recommendations implemented by management? I will verify. If they are meticulously following recommendations given by them, I can rely on the work done by internal auditor and quickly I can do my job as an external auditor. So the very purpose of this internal control system, internal audit, is prevention and detection is one. There must not be any unauthorized access of the company's property. No one should access company's property without prior permission. If you go to industry tomorrow, you will understand. Without permission, you can't touch any single paper also. If you want to access a computer also, permission is necessary. Who access everything in a format it is. What I am trying to say here, internal control system, one organization's success or failure is largely depends upon only internal controls. Trust me. But who is responsible for this? Management. But here one point I am giving one hint, remember, compliance procedure. This will come in the later part. Compliance procedure, substantive procedure they will speak. Compliance procedure means 3 points keep in mind. 1. Existence of internal control system. Second, continuity of internal control system. Third, effectiveness of internal control system. Compliance procedure speaks about only internal control system only. Existence of internal control system, effectiveness of internal control system, and continuity of internal control. You can't change internal control frequently as and when you need, because existing people will get confused what is to be done, what is not to be done. So very frequently, if there is a change required, there is a procedure for alterations. Follow it. And methodologically you have to change. So that other one is, what is internal check? Internal check is nothing but no transaction is commenced and completed by one person. No transaction is commenced and completed by one person. One person work is subject to review by another person. One person work is subject to review by another person. Imagine, and I don't dare to do certain irregularity because my work is going to be reviewed by immediately. If I did any fraud irregularity, it will be detected on the spot. And people, it works like a moral check on employees, and they don't dare to do certain irregularities in the entity. So this is also equally important. To understand internal check, and best example would say, go to bank. Nowadays we have a single window system. Otherwise in a bank, today also some banks are there, in one counter we give the check. He will give token to you and you will go and sit. That fellow will verify the check and give it to next person. That person also do the needful corrections, give it to cashier. How many people involved here? 3 persons. Even single window system also, in the teller counter I give the check and cash, whatever the transaction he is processing, reflecting in another person's system. And again, manager system also, what all the transactions were processing is getting recorded. It is easy that you can detect, isn't it? So that one person work is subject to be reviewed by another person. What is the result? I don't dare to do certain irregularity. Any error immediately can be detected, fraud can be detected. That's why detection and prevention become easier. Of course, unless the three persons colluded, fraud won't happen in the organization. Right? Okay, these points will come back again since the word internal control has come. I gave the meaning of that one. Internal controls to carry out appropriate test, inquiries and procedures. And now guys, proper disclosure of the financial information. Auditor should also decide whether relevant information is properly disclosed in the financial statements. He should also keep in mind applicable statutory requirements in this regard. It is done by ensuring that financial statements are properly summarized transaction, events recorded therein, by considering the judgment made by management by in preparation of the financial statements. Whenever management judgment is there, irregularities may happen. Auditor should be carefully examine those points. Management responsible, see this word, for preparation and presentation of the financial statements makes many judgments in this process of preparing and presenting financial statements. For example, choosing of the appropriate accounting policy. Which depreciation policy we have to follow? Left to management discretion. So that we have to select appropriate one in relation to the various accounting issues, like a choosing of the method of changing the depreciation on the fixed assets, or choosing of the appropriate method for evaluation of inventory, etc. according to AS2. So this paragraph is management is responsible for selecting appropriate suitable accounting system. Second one, developing the internal control system, preparation of the financial statements. Auditor is not responsible. So keep these words, my dear. The due course of time you come across this vocabulary. Management is responsible for developing internal control system. Second, for selecting the appropriate accounting policies and preparation of the financial statements. Always keep one word, auditor cannot do both preparation of the financial statements as well as audit. I can't do both parallelly because I am only writing exam and I am only correcting the paper. Will I fail? Never. How can I fail here? I am correcting my own paper. At least I will mark 50 or possible 60 exemption will get, isn't it? Otherwise I will write answer also, isn't it? I will leave the paper like that, and when I am correcting I take the notebook and write pata answer and correct myself. Because I am writing accounts, I am only doing the audit also. Never happened. That's why you prepare accounts, so I do the audit. So there is a difference between, no person can do both. And this is why management only responsible. And auditor evaluates the selection and consistent application of accounting policies by the management. And if there is a change in the accounting policy, I told you yesterday, when accounting policy can be changed, three conditions. First one, when the law got amended. Second, ICAI recommended. And last one, if I change accounting policy, I can present my books of accounts in a better way. I can change it, otherwise no. Words remember it. Repeatedly, if you listen, sometime it will be registered. That's the only intention of repetition. Application of accounting policy by management, whether such selection is proper and whether the chosen by policy has been applied consistently from period to another period. You can't change the depreciation policy from time to time. Understanding that financial statements of entities are prepared on historical information basis. Historical financial information means the information expressed in the financial terms in relation to a particular entity derived primarily from that entity's accounting system, but economic events occurring on the past time periods, but economic conditions or the circumstances at points of time in the past. Nothing but a cost of acquisition. And for example, when purchases and sales are reflected in the financial statements of entity, these are examples of the historical information. Nothing but a cost of acquisition only entries were made. According to market value, we won't write now. While issuing LIFO, FIFO, differently we can follow, but purchases at what price you purchase, same prices will be reflected. And these are about the transactions which have occurred in the past. Since the financial statements are prepared based on the historical financial information, it is logical that audit of the financial statement is also based upon such a historical financial information. Therefore, audit of the financial statement is based upon the historical financial information. And scope of audit, what it does not include. Auditor is not expected to perform the duties which fall outside the domain of the competency. Truly, you are the chartered accountant, you know how to do audit only. Someone asked you, work in progress, you are doing audit of a pharmaceutical company. Raw material, I can assess the value. Finished goods, I can assess the value. What about work in progress? I don't know. I am not a competent person to certify that. I need to dependent on one expert. But every quality I don't have. You can't expect me that I do everything. No. For example, case going on, litigation, case filed against a company. Management always say, I will win the case, isn't it? You ask any student going for exam, how did you prepare? Pakka pass. Nobody will say anything other than that. Until results, nobody will speak anything, isn't it? Here also same. And if you ask any management, what about this case? Pakka we will win case, sir. Isn't it? Everybody will speak that language. But legally, I am not expert as an auditor. Then I have to take a expert opinion from legal counsel. Or is there any chance that this case we are going to win or not? Without referring breach of confidentiality. Which means I should not reveal the company's name. Summary of the case I have to tell and take the opinion from expert. If I reveal company's name, unnecessarily I am giving a propaganda outside. Confidentiality, I should not commit a breach. I should take a legal opinion. Inside lawyer is the take of opinion. Outside legal experts are there. Without referring the company's name, tell the situation, ask them if this is the scenario, how it should be. That's why you are not expected to do anything and everything. And for example, we are constructing the building. What extent it is completed? Who can certify? Only civil engineer can certify. Ask your chartered accountant, you certify means? How can he will certify? What he will say maximum, how much money you spend if you want, I will certify on that. But what extent it is completed means I can't certify. I am not a civil engineer. So every auditor is having certain limitations. You can't expect him that you should do everything and anything in this company, right? Wherever necessary, he should be dependent on expert opinion. Expert definition, as we discussed in the prospectus chapter, same meaning applicable here also. Okay, now see the guys. For example, the physical condition of the certain assets like sophisticated machinery cannot be determined by him. Similarly, it is not expected that auditor determine the suitability, the life of the civil structure of the building, and there is a different skill set that may be formed by qualified engineers in this respected field. Auditor is not expert in the authentication of the documents. Genuineness of the documents cannot be authenticated by him. And because he is not expert in this field. Vouchers are available. Can he certify that this voucher is genuine one? Who knows, it may be fake also. How can you certify? There is a forensic department. Let them decide. You are not expert. You are not a forensic expert. That's why you can't certify that these vouchers are genuine and correct. And audit is not an official investigation. Please remember, audit is not an investigation. Investigation conducted only for certain irregularities. Fraud is there. Investigation. Morale of employees has come down. Why employees' morale has come down? I can investigate. In a particular area, in a particular country and in the central zone, southern zone, eastern zone, there is a deep fall off the sale suddenly. Why sales have reduced in this sector? Conduct one market survey will be conducted, investigation will be done, why customers were rejecting our product. And if you take the sample there, information, according to requirement, I can do the needful corrections there. Investigation is only for fraudulent activity. Auditor is not appointed to do any investigation. Investigation different and audit is different. Audit is done for a specific period, 1st April to 31st March. During this 12 months transactions, I will take at a random few transactions, I will do my audit. Investigation means specific activity, whether KCR is guilty of the fraud or not in Kaleshwaram project. Only that area only confined. Beyond that, the investigator cannot look into. Is there any irregularity in this company for purchase of machinery? Who is involved, persons involved? Only that activity investigator is restricted. But whereas auditor is not restricted for one area, overall functions of organization he can do investigation. Thereby auditing is not investigation. Investigation different, auditing is different. Investigators were appointed by management. Investigator need not be qualified CA. Scope of investigation defined by management. And investigator submit a report to management. Investigator always start a work with a suspicious mindset. Because I know that what I am going to detect. Because when I start my audit, I won't have a suspicion about the management, and I start my audit with an open mind. Like in this organization, no irregularity. I am going to certify only the financial statements are representing true and fair view. That's it. No suspicion in my mind. But investigator always start his work with a suspicious note. Because I was essentially appointed to detect that fraud only. Then each and every transaction, I look in a negative side, not on a positive side. That's why remember investigation point of view, 4-5 lines and always. Investigators were appointed by management, but auditors are appointed by shareholders. Auditors are nothing but investigator need not be qualified CA. Any person can be investigator. Even employee of a company can be appointed as an investigator. Investigator's scope is defined by management. But audit scope is defined by company law. If I am doing the company audit, scope of the company audit will be defined by whom? Law, not management. You can't restrict me what to do. Let me decide according to law. And investigator submit a report to whom? Management. Investigator's report is not a public document because given for company internal purpose only. Investigator's report is not a public document. On the other hand, auditor's report is a public document. If I want to prepare auditor's report, there is one format we have to follow. What is the format? In that format only you have to submit a report. And first one is the title. Second one is addressee. Third one is introduction paragraph. Fourth one is scope paragraph. Fifth one, opinion paragraph. Sixth one, place to date to signature. This order should be followed. Title. First one, title. What is the title? MSL, Maruti Suzuki Limited, Auditor's Report for the financial year 23-24. Year-wise, separate report. Why like that? Several reports are getting generated internally. How this report is audit report or management performance report, how do I know? This is auditor's report title. Second one, addressee. To whom you are addressing? Who appointed me? Shareholder. To shareholder. Who appointed me? I am a government auditor. C&AG appointed me. Comptroller and Auditor General. I submit a report to C&AG. Internal auditor, who appointed? Management. I report to management, addressee. That's why remember, addressee is always appointing authority. And next one is introduction paragraph. We'll discuss later. So I say 700 is there. Another one is scope paragraph. Next one, opinion paragraph. Next, place, date, time, signature. Oh, this format is must. Whereas investigator, no format. Whatever my findings are there, I draft one letter and give it to management. That's it. No format, nothing. That's what I wanted to say. Investigator need not follow any specific format, but auditor should follow specific format while producing his report. Maybe qualified report, unqualified report, adverse report, whatever you say. Now see this. Audit is not an official investigation into alleged wrongdoing. He does not specific legal powers of such or a recording of statements of witness or the oath as may be necessary for carrying out official investigation. And audit is distinct from investigation. Investigation is a critical examination of the accounts with a specific purpose, especially fraud. Suspected, it is essentially specifically called upon to check the accounts whether the fraud exactly exists, and it takes a character of the investigation. And objective of the audit, on the other hand, is already we discussed earlier, reasonable assurance on the financial statements and wherever necessary, auditing standards, accounting standards were properly followed or not. And reasonable assurance about whether the financial statements hold free from material misstatement, whether due to any fraud or error, thereby enabling the auditor to express his opinion. The scope of audit is general and broader, whereas scope of the investigation is specific and narrow. Specific means only for fraudulent activity confined, and a report is given to management. Are you clear with these words? Okay. And in this case, let's at home just to see one time, and your answers you write, and if you want any clarification, please ask me. You show your answers. If you want, I will give answers. Now, inherent limitation. In this, so far, whatever we discussed, only one question important, that is objectives of auditing important. Scope question may come, may not come. Very rare question that was. But this is very, very important question. Very frequently asked question is inherent limitations of auditing. Yes, you have to learn this perfectly. See guys. Inherent limitations. The process of, in simple, I would say like this, at a nutshell, if you, what is the inherent limitation? I am going for audit. Myself is auditor, you are my client. Books of accounts are maintained by whom? Client. Whether vouchers are genuine or fake, you know pretty well, rather me. Second, internal control system you developed. You developed extremely well. What is the guarantee? People working in organization following the instructions carefully. All fingers are not equal. All employees won't follow instructions given by management meticulously. Some will follow, some will pretend as if they are following. Then, best example, helmet usage. Some people always wear. Some people before signal they keep, after signal they remove. Notice? You can see the people attitude, you can see, not all. 1, 2 guys always you can see like this. Almost 95%, 99% will wear the helmet. 1% will be there. Definitely before signal he will keep it. Once he crosses the signal, remove it again. Again before signal you keep it. Internal controls developed by management, asking the employee follow this. All are following, but one guy will be there who is not following it. Inherent limitation. At the same time, the top level executives, till yesterday, very honest and sincere. Any guarantee today also they are sincere? Is there any guarantee that person will be the same for today also? Till yesterday, you were a very honest person. No guarantee today you will be the honest. Because your needs, requirements, situations change your thought process. Best example for this, I would say, there is the one person called Senior IAS Officer Acharya. Got a lot of respect in IAS circle. Such a honest person. And he got high regards in the every official. And officials respect him because uncorrupted person. Somehow we don't know, he was in the trap of the Rajshekar Reddy and signed some files. He took some money. Later arrested, put back off the bars. He was arrested, he was in jail. Can we believe these facts? Nobody will expect it. That fellow will be arrested. Till yesterday, he was very nice guy. See the next, what happened with how the Rajshekar Reddy influenced him, no one knows that. He was also in the trap. Signed, arrested. Later, of course, got a bail, came out. Considering his past service, surprisingly, government gave a posting. Because one incident make you dare to hear. That's why people working in organization, no guarantee they will be sincere and honest. Till yesterday, honest. One more IAS officer, if you do remember, youngest IAS officer and Sri Lakshmi. If she really in the right direction, by this time she would have become the Chief Secretary of the state. She was also in the trap of the Jagan Mohan Reddy and Rajshekar Reddy. Arrested, health got affected. Her husband, IPS officer. Sri Lakshmi, have you heard his name? And she was working again, she was suspended from office. Later, when Jagan Mohan Reddy became the CM of that state, again he called her and given the posting in AP, she is working. Otherwise, you Google it and you will get about Sri Lakshmi, IAS officer. My God, such a wonderful lady. But see, somehow the influence of the surroundings were honest. But neighbor people were not honest here. How long you can resist? You may be part of that crime. See? Never expected. And some people are. That's why internal controls developed by management, accounts are prepared by management, internal controls followed by them. Every report is given by you. Your papers I have to check. And no guarantee your information is genuine and correct. Inherent limitation. And I have to rely on the information given by you, voucher or document to information, clarification, explanation. Sometimes though transaction was not taken place, as if it took place, you may give one certification, management letter of representation. I have to accept it. I know that this is not genuine. But you are saying that it is. I am helpless as an auditor. Despite best efforts were made sometime, you can't do many things as an auditor. Let us see, guys. Important from examination. Nature of the financial reporting. Preparation of the financial statements including making of the many judgments by the management. What are those management judgment and estimations? Provision for the bad and doubtful debts. Contingent liability. How to create? Provision for bad and doubtful debts. How do we create this one? We take the current year, compare with the previous year, 1, 2, 3. Based on the last year experience, management can create current year. If they are really genuine, if the increase or the decrease can be done. But every time they are creating a higher provision for bad and doubtful debts because they want to show the less profit or vice versa. They are showing the less provision they are providing, they want to show the more profit, maybe. Second example, contingent liability. Huge amount of irregularities. Estimations will be made. All estimations are going to be wrong sometime. This is management judgment. What they say, we thought. They can easily escape it. But this is going to be irregularity, right? And these judgment may involve the subjective decision or the degree of the uncertainty. Contingent is the always degree of uncertainty. Therefore, auditor may not be able to obtain absolute assurance about financial statements free from material misstatement. because of this uncertainty, because you are making your own judgment. Management judgment may be proven wrong tomorrow. And if I take it as it is, I am certifying the wrong statements. I am giving a false information, wrong information thereby. And one of the premises for conducting audit is, premises means limitations, is that an audit is that management acknowledges its responsibility, preparation of the financial statements in accordance with the applicable financial reporting framework, nothing but a format for devising suitable internal control system. However, the controls may not have operated to produce the reliable financial information due to their own limitation. Management is responsible for developing internal control system, keeping the books of accounts. Whatever the internal controls you have developed, it is not giving expected result. Example, and to understand outside example I am telling. Sometimes they will convert this a two-way road, they convert into one way. Sometimes police people suddenly in the morning they will keep the boards in one way. They do some experiment, it gives a worst result, and next day they will change. Sometimes these are internal control system, nobody define overnight, and some rules we define, we implement, good results are coming, we continue, some are failure, we correct it, again correction, again correction, again correction, again correction. One fine day you can have the all internal controls free from all types of weaknesses, that also can't assure 90% you can. It has to be developed over a period of time thereby. And other one is consider, for example, of course this is an example in examination, you need not write. Goods receiving section. Example, management of a company has the devised internal control. All purchase bills should reflect the stamp signature of the authorized person. Goods received section of the company stating the date and the time regarding receiving the goods in the premises. It is an example of internal control system. Nothing but whenever you receive the goods, you have to write date, time and signature. And it is an example of internal control system. The company to ensure that only those purchased bills are produced for payment for the goods received actually. Now, what happens if the concerned accountant and the authorized person goods received section collude? At gate, goods received morning at 7 a.m. and entry shall be made in a store within 10 minutes. Hardly, carriage inwards won't take much time. But whereas morning 7 a.m., evening 7 p.m. entry was made. 12 hours, what happened to these goods? Did they really received at 7? Nowadays means videos are there, you can check it. And earlier these points were not there now. You have to believe the signature signed by them. Though goods not entered into premises, as if they entered into, they can make an entry. Auditor can't check each and everything in I can't be suspicious. Each and every transaction. Thereby, I have to believe you. But whereas this person, both are colluded. What they write? Though goods are received evening at 7 p.m., as if received morning 7 a.m., both can write entries and they can sign. And how can I get it out as an auditor when they produce it? I believe that. Yes, received or received. Internal controls defined clearly. But since both are colluded, you will request to stores person or that entry person or supplier, top level people will say, both should make entries morning 6 a.m. goods received. Goods delivered evening 10 p.m. Make an entry. Sir, entry. Superior, na? You can't say anything. Entry morning 7 a.m. Make an entry like that. Sir, entry. No, sir. Fired. That's all. Simple, na? We know how to treat a people. You won't fire directly. You will call his boss. Take care of this guy. He knows how to torture him. Organization, and that's why he is not qualified guy. After all, gatekeeper. And he will be harassed like anything. And he will do whatever you want. Pollution become easier, my dear, thereby. And in case of the overriding the internal control system devised by the company due to the collusion between two persons, such a probable collusions one of the limitations for the internal control system. So finally you can write entire point in one line. You can write collusion between officers or employees working within the entity will be the huge limitation for the effective execution of internal control. Okay. Second one is nature of audit procedure. Auditor carries out his work obtaining the audit evidence through performance of the audit procedure. However, there are practical and legal limitations on the ability of auditor to obtain audit evidence. For example, auditor does not test all the transactions and balances. All, absolute is not there. And he forms his opinion only by test samples, and it is an example of the practical limitation on auditor's ability to obtain the audit evidence. Management, of course, with this I hope you understand. In a class, say 50 students are there. Whenever teacher asked a question, some students were nicely answering. Outside, what faculty will say, this batch is very nice batch, and students are replying and very nice batch. Definitely all will pass exam. Representative sample only, na? Few people were answering, he was immensely satisfied, he was labeling that all are good. In fact, that is not the case. Or vice versa. All are very good students, but they have no hobby of answering in the class. Some students knows answer, they won't reply, they will sit like this. I know that. I am not joking. Those who are answering will no answer. No. There are many people who knows answer, they won't reply. That's all. They won't reply. But they know answer. Because they have fear, they have their own limitations maybe. But based on, for example, very few people, 1, 2 are answering, others were not answering. What teachers say outside, this batch dull and they are not answering. In fact, all passed exam. See? That's why, my dear, we are going to do audit based on test checking. I have selected items and every 20th item select. Every 20th item. First 10, 28 items selected and 20, 40, 60, 80, 100 like the 20 items were selected. All 20 items are fraud. Assume. Then what do you say? Hey, fraud company. In fact, those 20 only fraud. Remaining all correct. I am making generalized statement, na? That's wrong. That limitation will be there from auditor's point of view. But that representative sample. Since one activity is good, we can't say that he is really doing very well in this sector is thereby. Management may not provide complete information requested by the auditor. There is no way by which auditor can force the management to provide the complete information as may be requested by auditor. In case he is not provided with the required information, he can only report, and he can example of legal limitations auditor's ability to obtain the audit evidence. What maximum I can do as an auditor? I can seek the management, I want this information. They said, we will provide. When? Tomorrow. Tomorrow I will contact the information. Other person out of city and tomorrow. Other day also not there. No, his parents were not well. He's not on the leave. Duplicate key will be there, na? We can open the locker and give me the document. He said, no, sir, we can't touch. I'm sorry. Documents are with him. The key also with him only. We don't have any master key. Delay tactics. On the last day of audit, it is for 1 week or last day of audit, that too, evening, last 1 hour, he will come. By the time audit is over. Sir, he has come, will you require how many documents are there? This many documents. What can I do with that? Nothing but a management intended to, not to give some information. Then definitely, how can I read your mind what is running? And auditor will try his best to get an evidence, but whereas sometimes not possible. Because unless management is not supported, I don't know how to gather information. I want a confirmation from supplier. For that, I have to draft a letter and send a mailing. For that, management should support me. Then only I can get a confirmation. There is a non-cooperation from the management. How could I do this? Thereby. Management may consist of dishonest and unscrupulous people, may be itself involved in the fraud. It may be engaged in concealing the fraud by designing the sophisticated, carefully organized schemes that may be hard to detect by the auditor. This is called organized fraud. Organized fraud is difficult to recognize. Organized fraud. It's very difficult because from origin to conclusion will be there. Management approval will be there. And permissions are sanctioned, vouchers are available as if transaction took place. You never be suspicious that this is a fraud. Like that they will prepare. Like a Satyam case, what they did, manipulated the records for several years and as if profits were there. Like that. And it may be produced the fabricated document and before auditor lead to him, let him to believe that audit evidence is valid. However, in reality, such documents could be a fake or a all vouchers produced by employees also not correct. And medical reimbursement. You know that how many bills are fake, but still they will sign. Auditor only knows that. Reimbursement of traveling expenses, though not traveled, bills will come. And auditor, this one area of irregularity. And stock with third party. I can't go to each and every third party and verify. I believe the management information. Because physical verification of the closing stock is not a primary responsibility of auditor, management. I can do only test checking. There's every chance that irregularities may be occurring. And we have already discussed in this section the scope and all. This is not necessary. And the scope of audit, auditor is not an expert in authentication of document. Therefore, he may be led to accept the invalid evidence on the basis of unauthenticated documents. And it is quite possible that the entity may be entered into some of those transactions with a related party. Related party transactions, if any, these transactions only on paper transactions may not have actually occurred, and the auditor may not aware of such related party transactions. Audit procedures may not be able to detect the probable wrongdoings in the transactions. Related party transaction is nothing but an arm length relationship. Related party means arm length relationship. What does that mean? There is one customer, there is one relative to a KMP, nothing but a key managerial person. For a customer, we are giving 10% discount. For a related party, we are giving 50% discount. Because he is related to me. And it is a last to company only. If 1-2 transactions means okay. If a number of transactions are heavy amount is involved. Probably you may buy the goods on the Binami name with a discount and you may sell in the market and reference amount you may take it. Chance is there. Thereby you have to check, and whenever the related party transactions are there, audit committee under section 177 of the Companies Act will ask the auditor to identify the related party transactions, report to us. And the audit committee will examine that. Is there any genuinity in this related party transactions or not? And not in the nature of investigation. Already we know auditor, you want to do any investigation, just he will do watching of transactions, verification of transaction. And auditor is not a official investigation, and hence auditor cannot obtain absolute assurance about the financial statements are free from material misstatement due to the fraud or error. What is absolute assurance? 100% guarantee. these transactions are, these financial statements are free from all types of the fraud and error. 100% absolute assurance. Never give absolute assurance. Can give only reasonable assurance. Reasonable means close to 100 but not 100. And timeliness of the financial reporting and decrease in the relevance of information over the time. The relevance of information decreases over the time. Auditor cannot verify each and every matter. Therefore, balance has to be struck between reliability of information and the cost of obtaining it. Cost of obtaining is more than the what you are going to see. Better that you should not obtain such information. And considering an example, auditor who is conducting audit of the company since the last 2 years. During these 2 years, the company had sought detailed information from the management of the company regarding the various matters. During his 3rd year stint, he chooses to rely upon the sum of information obtained in the past audit procedures in the 2nd year. However, it could be possible that something new has happened, but that information is not relevant. So, the information being relied upon auditor is not timely and may have lots its reliability part is concerned. Nothing but you are auditor for 5 years and as an individual 1 term, as a firm 2 terms. Already first year audit, 2nd year audit completed, 3rd year audit you are doing. Some information is there which is pertaining to last. Last it was not happened, current year only it was taken. I have to go back to the past and verify that data, that expenses are very heavy because I have to travel from one place to other place and a heavy expenditure is involved. Better that, ignore that. Anyhow it was not happened, examined, and the current year management is certifying, rely on the information given by management. Future events. The future events are the conditions may affect the entity adversely. Adverse events may seriously affect the ability of entity to continue its business. What are adverse effects? Simple example, our books of accounts are closed on 31st March. 1st April to 31st March. I have to do audit of that 12 months business transactions only. Whereas on 15th April, there is a fire accident or a short circuit of a power, 50% of the factory affected, seriously damaged. This fire accident won't have any effect on the past. Last 12 months it won't affect, but definitely going to affect next financial year. Our performance won't be the same at comparatively last year, because last year 100% capacity we utilized. Now we are going to utilize only 24, 25, 50% only. Operational efficiency will come down, sales will come down, market profitability will come down. Should I report or not? That's a question for auditor. The future events. And these businesses ceases to exist in the future due to the changes in the market conditions or emergency in the new business models, product, and due to the one set of the adverse events. For this you can refer Geo also. Before Geo entered into market, Airtel dominated the market. And Idea got a good market share. Vodafone got a good market share. But suddenly Geo entered into market, they said free. By that time, whatever the recommendation given by the auditor for the last financial year is correct. Based on that, what I am trying to say, auditor certificate is not a future viable certificate. Since the last year company performed well, does not mean this year also company will do well. No guarantee, no? Same decision will be taken by management timely. Uncertainty will happen suddenly. COVID-19, suddenly it has come and lockdown. Who expected it? Some incident will happen, certain uncertainties cannot be foreseen. Then there is Ukraine versus Russia war, got some impact on certain countries. then definitely certain things I can't foresee as an auditor. That's going to be one of the inherent limitation for auditor side. Therefore, in view of above factors, that auditor cannot provide a guarantee that the financial statements are free from material statement due to any error or a inherent limitations. We have to learn these points also. Please remember, and according to SA 200, objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Auditor is not expected to, cannot reduce audit risk, zero. There are inherent limitations of audit. And since there is inherent limitation, I can't take that risk. I can't say, no, these are limitations so that I am not responsible. Auditor should be responsible. He should be diligent and careful man. And the inherent limitations of audit arises from nature of the financial reporting. The preparation of the financial statements included judgment by management. What is judgment management? Contingent liability, provision for the bad and doubtful debts, so warranties we have to pay. Then how to judge this one? Provision for the bad and doubtful debts. Remember, ours is a pharmaceutical company, or a textile company, or a iron steel company. Countrywide, nothing but the government of India is having a statistics. In this industry, what is the pharmaceutical industry provision for bad and doubtful debts? As a whole, government of India is having one statistics. They said 10% bad and doubtful debts are there. Industry as a whole. Your industry as a specific, in your company, you have the best internal control system, so that able to collect the money properly. You may have the 5% bad debts. Now I am going to provide a provision for bad and doubtful debts. Which one I have to take? Our experience of 5%, industry experience, our experience. Our experience only we have to consider. Not industry. If I provide industry, I am providing more provision for bad and doubtful debts. Profits will come down. And other one is vice versa. If it is our experience is the 15%, industry experience is the 10%, then 15% only. I have to go. And I must establish on that. Because we are unable to recover from the customers. There are a huge amount outstanding. And I can't make a less provision. And in a phased manner, we are trying to control this kind of the bad debts provision. And estimations were made. Estimations are again a huge amount of irregularity. And they can inflate the balances by anything. Like that, auditor has to get management judgment. Wherever management judgment is there, irregularity will be. We have to be carefully assess that. And other one is nature of the audit procedure. There are practical and legal limitations on the auditor's ability to obtain the audit evidence. Possibility that management or others may not provide or intentionally or unintentionally complete information for the presentation of the financial information. Truly. If I did the irregularity while keeping the books of accounts, I won't give total information to client. My auditor, I won't give. I try to always avoid, nothing but to postpone the things. And with that, you should understand as an auditor, there is certain thing wrong. And fraud may involve sophisticated, carefully organized scheme. Organized fraud is there, you can audit it. And not in the nature of investigation. Auditor is not in a official investigation of the alleged thing. Remember, I told you already. Investigator always start with a suspicious mind. But auditor will never start with a suspicious mind. He always think that these books of accounts are representing true and fair. And last, timeliness of the financial reporting and decrease in the relevance of information over a time. Last point. That is the relevance of information, thereby its the value trends of to diminish over a time. There is a balance of the stuck between the reliability of information and its cost. Future events. Just a repetition, right? So this is for today, and we see tomorrow. Again, this is very important topic. Audit engagement. Direct questions are coming sometime or application based. Inherent limitations is learned. This overall topic today, inherent limitations are important topic from exam. Thank you guys. Tomorrow we see the remaining.